Hi everyone, it's Fook, and today is the big day for the big review. Uh, so I mentioned in my last video, which I think was the portfolio update for August, that I was going to do kind of a big review on September 14th, and this is it. So what I'm going to do today is to be a little bit more transparent, not with everything, but enough to kind of give you a sense of what I'm doing and kind of practice what I preach. So I am going to let you take a look inside one of my accounts and show you how I would invest $1 million. So, a lot of these videos you see on YouTube about financial investing and all of that talks about how you would invest $1 million, or they talk about a specific portfolio or this portfolio, but it's all theoretical and it's not real money. There are a couple of folks who really show you, like real account balances, and I have for one of my M1 finance account just to track like this test portfolio that I'm building, this asset allocation. But I've gotten to the point where I like the asset allocation enough that I'm going to put it into use, and I'm going to share that with you on a monthly basis. So the way this is going to work is that I have an investment policy statement that you can see here on screen, and I blacked out some of the more sensitive information because I'm not going to be completely open book. I'll be as open book as I can, but you can figure out the rest for yourself. So this was recently updated and basically drives all of my decisions. So my portfolio universe has accounts across Schwab, Fidelity, M1, and Interactive Brokers. I have a mix of 401k plan, IRAs, as well as just taxable brokerage. And today I'm going to show you my taxable brokerage, or one of my taxable brokerage accounts. And everything is driven by this document. It's a 6-page document that lays out the purpose, the objectives, my time horizon, risk tolerance. I'll kind of go through this. My transitional, what I call transitional kind of asset allocation. Most importantly, this section right here, rebalancing. So over the next, call it 18 months, I'm going to reallocate $30,000 a month on the second Tuesday of every month. So that's why it's September 14th. And reallocate it to my strategic allocation. And then I will do an annual, rebalancing as well. But that's why it's the way it is. And in terms of my allocation, it's basically what you've seen on M1 Finance. It doesn't follow this allocation exactly because this is what will be the retirement allocation, but it's very close because the retirement allocation has a cash cushion. This one doesn't. But this is what I'm using to kind of guide my decision. And I highly recommend that if you do not have a investment policy statement, that you create one so that you can follow it. So it's basically that time to go ahead and buy into the investment. Before I actually do the trades, and I'll go over the portfolio a little bit more, but before I execute the trades, I do want to say that the research has shown that you shouldn't try to time the market. I have some reservations, in terms of my long-term bond holdings and all of that, but you really shouldn't try to time the market. The next question then becomes, should you do a lump sum investing, or should you dollar cost average, or DCA, over time? And the research, I have to say, shows that lump sum investing gives you the best result. That means that right now in this portfolio, I have about $496,000, call it $500,000 in cash. The other half is invested. And the research says that I should just take that $500,000 and put it into my allocation that I've determined and call it a day. That's the academic research. I don't feel that great about it because of a couple of things. I'll sleep better at night if I do the dollar cost averaging, just because I do feel like the market is at an all-time high. Now, historically, I'm going to get a lower result by doing that, but there's something to be said about having peace of mind. So that's why I'm doing dollar cost averaging. I'm picking the next 18 months. It's probably going to be more like 16 months. We'll play it by ear. If I do see a huge drop in the interim, I may just go, screw it. move everything into my allocation, call it a day. But for now, I'm gonna buy in $30,000 a month until we work this cash balance down. I do promise that because this is the first video of this type, it's going to be a little bit longer as I explain things. But as we go forward, it'll just me executing the trade and kind of saying, where we're at. So while I'm starting at about $1 million, this particular taxable account has gone as high in recent days, really. It's only a matter of days as, $1,010,000, not 1.1 million, but 1,010,000 to as low as like 995,000. I mean, it fluctuates, on a daily basis. But right now it's about $1 million, and that's what we're going to work with. So in terms of the allocation, it's kind of close to what I would do, but it's a little bit out of whack. So my allocation is 50% NASDAQ 100. So I should have half of my invested funds into this. So if I'm investing, 500 and, call it 500,000, I should have 250 here in market value. Clearly, I don't, right? I have 225. It's close, but it's a little bit lower. I want to have a 25% allocation to long-term bonds. And I want to take a moment here to show that I'm primarily using TLT as the vehicle. But if you scroll down here, I also own direct bonds. I put 40 grand into this 2050 bond, buying it directly. And I'm still struggling with, should I buy bonds directly or through an ETF? The ETF is not very expensive. I think it's 0.15 of a 15 basis point, maybe 20 basis point. Management fees aren't crazy, but it's a mix of treasury bonds that are 20 plus years. And I'm not sure if I want to do that or hold the bonds directly. So I have a mix right now, but together the bonds are 9 plus 4, so 13-14%. Ideally, they should be at 25. In terms of gold, 25% of the 500. So that's 125. So right now I have 42 plus 90. So I have 132, and I should be at around 132. So 25 of that, 125. So I'm close, but not quite there yet. I'm overweight on real estate. So on real estate, I want to be 10%, so it'd be about 50 grand, but right now I'm at 62. And then the gold should be 15. That's a little closer, okay? So that's how it all shakes out. I promise in future videos I won't go into as much details. And as you've heard in my other video, what I do on my long position is that I write cover calls. So these are all the call options that I have, and they're monthly. So I have call options on gold, on the long position for the NASDAQ 100, and on TLT. And they're so far out of the money that I don't think that they're going to be called away. We'll see what happens. But I'm collecting healthy premiums, in the interim. If they do get called away, I'm going to buy it right back. I'm not worried about that. I may give up some of my profits on the premium, but I think it'll generate a little bit, not a lot, but a little bit of extra income. On the put, you can see here that I am taking my cash position and buying out of the money puts, selling out of the money puts to speculators and collecting premiums on my cash. And I'm pricing this pretty darn low. So I think currently the NASDAQ 100 is trading at about 376, 375. And I'm looking to sell puts at 335. So it's some 10, 12% below that. Which basically means that I'm giving, a service to take on this risk for the next couple of weeks, because it expires on October 1. So I'm getting that premium. If we were to see a 10 to 12% drop, then the owners of those options would just put the shares to me. I have it cash secured, so I'm all good, no worries there. And it just means I'm going to buy the QQQ at a significant discount, and then I'll turn into a long-term holder. So that's what these options are for, but they don't really matter. I've talked about those in my other videos. So let's go ahead and add the 30,000 to this. So the way I've worked it out is that because the portfolio is slightly out of whack, what I'm going to do is I'm going to buy 10 shares of TLT at whatever the current price is, and then the balance of the 30,000 I'm going to buy the NASDAQ 100, and then we'll refresh the portfolio and see where we're sitting at. So right now, let me do another refresh before we buy. So the market value we're holding in this has dropped a little bit. It was 504, now it's 503. And we can see that we dropped below a million. So something has happened in the interim. Probably the inflation report went out. Was supposed to go out today, but like I said, it doesn't matter. It fluctuates daily. But let's go ahead and go do the buy. So I'm going to go ahead and refresh the quote here, but I'm going to buy 10 shares of this. So buy 10 shares. Okay, and we'll buy it at market. And call it 1500. Okay, that looks good. And I'll place the order. All right, this should be executing soon. And I'll go to my next screen here and let me refresh the quotes. And I'm actually going to refresh this page too because it looks like some of the cash secure puts on the NASDAQ is not letting me buy in the full 30,000. I think it was like 27.5. It's close enough. But what I'm going to do is on the available cash, I'm going to buy the NASDAQ 100. So the NASDAQ has gone down. So I'm going to go buy. And we're going to use the calculator. It's not letting me. I'll do market. All right. And we'll put in 26,100. Calculate, and I can buy 69 shares. It's fine, so I'm going to go ahead and buy it. Place the order, and these are both market orders, so they should be executed. I'll go ahead and refresh, and we can see that market value has jumped up to 530. It was 503 before, so that was the 27.5, almost 30,000. And now my position has increased accordingly. So out of 530, I have 250,000 roughly in NASDAQ 100. So that's about half. I'll buy some more on the next month. Between TLT and the bond, the direct bond that I'm holding, that's about 25%. And then the gold and the real estate REIT is what it is. So we'll leave this all alone until the next month when we'll add another 30,000 roughly, and I'll show you when I do that. Right now, my balance to trade, so even though I have this cash here, right, most of that is actually locked up with this cash secure put that I wrote, okay? So I'm choosing not to go naked. I think that's more dangerous, so I'm writing a cash secure put, which basically means that for these 1,400 shares, 14 contracts on the put option, I'm putting up hard cash to secure that position, which is fine. So maybe next month what I'll do is I'll write 13 options instead of 14 and free up some extra cash and maybe invest a little more than 30,000 into that allocation, and we'll see where we hit. But that's it for today. A little bit of a long video, but I hope that you can find some utility and enjoyment in watching how you invest $1 million. And we'll just keep tracking this portfolio. This is a live account, so I plan to be adding money to it as I have extra funds and allocate to the different accounts. But we'll see. We're starting at around $1 million. We'll see what we do in the next 16 to 18 months. All right, everyone. Thank you for watching, and give me a thumbs up, and check back with me at the end of the month when I do a whole portfolio update, and then roughly second Tuesday of every month when I do these buys into the portfolio. See you later.